Thanks for tuning in for another short educational video. As you can see by the background, we're still working from home. What I wanted to do was make a short, concise video that has a lot of different bullet points. It's going to cover a lot of different points on some of the legislation that came out in regards to retirement accounts and individuals receiving benefit from the government in regard to the COVID-19. In attempts to keep it short, 2 or 3 minutes, I'm actually going to read down through some notes that I've prepared here, so if you bear with me. Last week, Congress passed the Coronavirus Aid, Relief, and Economic Securities Act, a large package that will help with federal spending and tax cuts. Some of the benefits to this, there's 2 programs that are geared towards directly putting cash into the hands of individuals. The first is the Direct Cash Payment to Household Plan, where eligible adults will receive $1,200 apiece, $500 per child, with a phase-out provision beginning at $150,000 in income for a couple who files jointly. The second piece to this is some enhancements that they've done to the unemployment benefit, mainly where it will cover self-employed individuals, extend benefits for in a period of time up to 39 weeks, and for some, it will provide an additional $600 per weekly check for up to 4 months. One of the other items that was addressed in this legislation was the Small Business Administration loans. These are loans that are available to small businesses to help support them and keep them going, much of which will be forgiven, specifically up to 100% of the money used for the loan for the first 8 weeks after the loan is issued to pay for payrolls, rents, utilities, and the interest of which will be forgiven. The percentage that is forgiven is tied directly to the business keeping workers on the same payroll and the same wage. An example of this would be if the employer were to lay off 10% of the employees, then 10% of that loan would not be forgiven. Other portions of the legislation provide for large distressed industries, transportation, and state and local governments as well. Also, the CARES Act has added different items within that legislation that if you're directly diagnosed with COVID-19 or you have a hardship or you need to use additional money to continue to shelter in place, there are some provisions that will allow you to use your investments or may affect your investments pursuant to some of these laws. So with that, the first individual investment provision within the CARES Act addresses required minimum distributions. So under the CARES Act, all required minimum distributions are suspended for this year. This includes inherited IRAs and those who are over age 70 and a half. This is to help retirees keep the money in their pocket so that they're not forced to take a distribution when the market is down. Next, tax filing deadlines have been extended to July 15th for this year. With that, they have also extended IRA contributions to that same date. So you can still make your 2019 contribution up until July 15 of 2020. Next, the 10% penalty for taking early distributions from IRAs, 401ks, and qualified plans has been waived up to $100,000. This is if it's within the calendar year, so from January 1st of 2020 to December 31st of 2020. Lastly, they have provided for 401k providers to increase the amount of money that you're allowed to borrow from your 401k. I would consult with your 401k provider for more information on that. If you have any questions on any of the things that we addressed here today, please feel free to call or email us. Again, that was a lot of material to cover. We're just trying to keep you informed, but give you all the information that you need within a few minutes. Thanks.